Hi, in this video, I'm going to just talk about today's price action, which is December 9th, and try to dissect the price action through the day, and specifically in context to liquidity, right? Because as you know, liquidity is what fuels the market, runs the market, right, in both direction. And I just want to focus this video in and around the liquidity concept and how important that is. All right. So this is overnight price action. As you can see, this was the Asia high, right? And then if you look at it, London started and created or engineered a bit more liquidity here. The London high was 6868.25, whereas the Asia high is 6868.50. So you see how the liquidity got engineered during the overnight session, right? And then what transpired here? It made a low, and this is where the regular session started, right? The 9:30 a.m. This is Eastern time zone, so 9:30 a.m. is when the market actually started. And if you see, there was this quick move higher, and it ran this liquidity. So you see, the market always go and seeks liquidity. So when it opened, it actually ran the liquidity. But if you pay close attention to this price action right here, you see there is also more engineered liquidity at the lows as well, right? At 6844.75. So when the market came down, engineered more liquidity, but didn't purge this and went ahead and purged the other one, which is the opposing liquidity, which was also engineered, right? Here on the buy side. After that, see what happened. SMT at the top, and then the price gravitated towards the liquidity, right? So, in a nutshell, what today's price action signifies is that, if you have a scenario like this where you have an engineered liquidity at the top and you have an engineered liquidity at the low, and the market opens somewhere here, what you want to wait for the price to purge liquidity in one direction, either here or here. And see, in today, it actually purged the liquidity in this direction, and then after an SMT right at the very top, it actually turned around. And then when it turned around, with whatever method of entry you follow, right, it could be looking at this change in structure right here, with the fair value gap. So an entry could have been here, or whatever way you enter, right? But as long as you know that where the liquidity points are, and you wait for the liquidity on one end to be purged, and then look for a reversal, your target has to be on the other side of the liquidity, right? Which in this case was at equal low.
Hey everyone, it's Dale here. I hope you enjoyed the video. If you like to trade alongside me and our team of prop firm funded traders every day, then click the link below the video and hop aboard. We are looking forward to trading with you.